Good morning, everyone. It's Jared here from the Alpha Capital Group to begin with a quick preview for the week ahead. Now, just before we start, we are offering a free competition through the month of April. So the first prize is a 100K evaluation, free challenge. There is also a secondary, third, and a number of other spot prizes as well. So check out the Instagram posts for more information on that. In addition, we are still running our 30% discount at the moment on challenges in the short term. So if you're interested, worth getting hold of one of those before the discount expires. Now, I suppose now that we kind of gearing up for the beginning of a new week, let's have a quick look at the economic calendar and I suppose the key data for the week ahead. So today, leading through the day, we do have Fed Chair Powell speaking today. We do have a number of other bits and pieces coming out across the board. So we had PPI in Germany this morning, and it came up a little higher than expected. Again, 1.4% is obviously showing that, yes, the PPI figure is still prevalent in the markets. We have obviously Lagarde speaking again this morning with the Chicago Fed National Activity Index at 12:30 today. So not too much today in terms of data. As we know, Monday, Fridays tend to be softer days in the week. So Tuesday, Wednesday, Thursdays tend to find a lot more volatility. So Tuesday, we have a raft of different central bank governors and members speaking in a number of different locations and jurisdictions on Tuesday. So first up, we've Governor Lowe, the RBA chair, speaking at 1 o'clock on Tuesday morning, so just 1 o'clock tonight. We've got ECB de Grundos speech as well this morning. We have Panetta at 1:10 and we have Lagarde again speaking tomorrow at 1:15. So interesting, a lot of Europe. So that's three of the more influential, excuse me, individuals in the ECB all speaking tomorrow. And we have Fed Williams. So Williams speaking at 2:30. We have the Bank of England, Cunliffe speaking at 3:15. Now, just I suppose a side note, Cunliffe was the bear for last week's Bank of England interest rate decision. So Cunliffe was the individual who didn't vote for a rate hike. So it'll be interesting to see what his comments are. So that could be a close one to follow, particularly for the gilts and the pound, for those who are trading the pound on Tuesday. Tuesday evening, then we have Lane and Mester rounding off the central bank speakers at 6 p.m. and 9 p.m. So definitely Tuesday will be an interesting day with all the different outlooks coming from all the different central banks as well. So Wednesday becomes a little bit more data driven. We've a lot of UK data out in the morning time. We've CPIs, we've PPIs, we've core consumer price index, and we've got the retail price index as well. So a lot of these now will actually illustrate where is the pound or where is the UK currently at in terms of its medium-term inflation outlook. Okay, so we have 5.9. So of course, anything in the 5.8, 5.9 is coming in on the new revised expectation. So this is the estimations. Anything above 6% should be a little bit of a worry for the UK economy, obviously because of higher inflation. So I would be keeping a very, very close eye on the core CPI and also the normal CPI figures. Again, just to see kind of where we currently are. And also as a side consequence, has the Russia-Ukraine narrative distorted or changed any of these shorter run figures as well? So we're keeping an eye on that. Now, tomorrow or Wednesday, should I say, we also have the budget report out in the UK. So that would be an important event as well. So we're keeping an eye on that. In the afternoon, we do have Fed Chair Powell speaking again for the second time this week. So again, keeping an eye on that. I don't think it's going to be massively different compared to what he's going to be saying on Monday. But of course, let's keep an eye on some of his comments. We do have some additional data out in the US and in Europe, new home sales, consumer core confidence, and then we have some overnight data as well with the BOJ monetary policy meeting. So that would be an interesting one, just I suppose to have a quick glance. Is there anything substantially different in terms of the BOJ, the Bank of Japan's monetary outlook? And then that brings us into Thursday. So Thursday, as we know, traditionally speaking, is the busiest day of the week. And Thursday, we have a hell of a lot of data. So with France, Germany, Switzerland, Eurozone, and the pound all out before 9:30. So we have a raft of data. So Thursday, as we know, traditionally is the busiest day of the week. We have a Swiss National Bank interest rate decision. Of course, we're not expecting any change there in their longer term outlook of their monetary policy. And then that brings us to Thursday afternoon. We've got durable goods. We've got initial jobless claims. We've got market PMI composites. We've got a different number of Fed speakers, Evans, Bostic, and Waller, all speaking on Thursday. So Thursday is going to be a busy day right through. So I suppose finger on the pulse on Thursday for the volatility that will ensue. And then Thursday evening, we've got some more CPI in Japan as well. And then Friday, to round off the week on Friday, we have retail sales in the UK, monthly year on year as well. So it'll be interesting to keep an eye on the retail sales excluding fuel. So that would be one to watch as well, particularly because we know how much the fuel prices have been distorted with inflation over the last probably 3 to 4 months since the beginning of December. So we're keeping an eye on that. And then obviously Friday afternoon, we've got the Michigan Consumer Sentiment Index, which is always a popular one to keep an eye on. We've Fed Williams speaking, and we've the pending home sales as well. So we've quite a lot of not high volatility, but quite a lot of different jurisdictions coming out this week. We've France, we've Europe, we've Germany, we've Switzerland, we've Canada, we've the US, we've the Eurozone broadly speaking, we've Japan, we've Australia as well. So there's a lot of data this week across the board. So just keep an eye on that. Tuesday, Wednesday, Thursdays do tend to be the busiest days, as we said beforehand. So we're keeping an eye on that. Now, let's have a quick look at the charts just before we close. Now, if we look at the price action last week, into the close, Friday continued that massive bullish run that we saw on Monday. We didn't see that stall out at 4,400 in the S&Ps. We broke right through and continued moving higher into the close with a very, very strong stock market close on Friday. So again, on the weekly, if you were to look at the weekly candles, massive weekly strength in the S&Ps, broadly speaking, in the Dow Jones, in the NASDAQ. And we saw that massive move from that 4150 back through 4,400 and into new short-term highs to begin this part of the week. Now, again, we're still holding under the 4,500 handle. So again, it'll be interesting to see, does this recovery remain a little bit more stubborn and resistant to the upside? So we're keeping an eye on that into the early parts of this week, but a very, very strong close on the indexes on Friday evening's weekly close. Now, again, if we go back to the NASDAQ, again, the NASDAQ reached that 14,000 level. And by Friday evening, we were closing just shy of that 14,400 area of interest. Now, I suppose if you're looking at the index more prevalently speaking, again, we have short-term levels, intermittent. We had 14,000, as I said, we broke through on Friday. We've come all the way back into this massively key important level from last kind of September, October, where the price action has broken through. So if the price action is breaking through this 14,400, 14,500 this week and continues to progress to the upside, that's given a lot of optimism into the stock markets in the short term. And again, I suppose when we look at where the Russia-Ukraine invasion started way back on the 24th of February, we can actually see that all these indices are now comfortably above where the invasion actually began. So the Russia-Ukraine invasion on the stock markets is not having a detrimental effect as people might suggest. It's worth keeping an eye on that as well in the short term, but massively bullish movements last week into the close. And this week now the price action is probably starting the week on a little bit of a consolidation note, but we're keeping an eye on that. Last but not least, then on the index, if we look at the Dow Jones, we've broken through as well. We've continued to push higher through this 34,000 level, and the price action has continued to rally to the upside. We have kind of come back just shy of this 35,000 level. We kind of topped out around at 34,800. The price action now to begin the week is in a bit of a consolidation. I kind of expected that given the volatility that we've seen last week from Monday, where the price action went from 32,650, 32,600. All the way up to 34,800. So there was an over 2,000 point move last week in the Dow Jones across the week. So again, that's illustrating that the volatility isn't just to the downside, it is very much the other way as well. So we have to be conscious of that as well in the shorter term. If we look at gold, not really too much happening on gold since our viewpoint last week. The price action, as we said, did get that bounce off the 1900 level. We had rejected for 1950, and the price action is back kind of midway between the two anchor points here as well. Nearer term, I suppose I'm going to keep an eye to see, do we get that short-term relief rally back to the 61.8 personally. But of course, as the markets would suggest, we are currently in this consolidation move. So if we do break back above this 1930 level, we could see another short-term bat of strength back into these short-term highs, 1950, and maybe even a potential break into this key area around 1960. So we're keeping an eye on that. And of course, let's finish out the charts with a look on the oil prices. And we can see that the oil prices on Thursday, on Friday, had got a little bit more strength. That's followed up with more strength again today. We didn't quite get this gap close. This gap close we alluded to just under around 92.50. We didn't quite get there. We bounced off the 50 MA and we are continuing to push higher. So again, that will put more prices on fuel and any of the commodity driven assets. So we're keeping an eye on that because we've gone from last Thursday, we were at 94.5 or 94.5, and now we're all the way back up here at 109. So massive volatility in these markets, and we can even see as well with the weekly wick rejection last week in the oil markets. We wicked up, we come back down to retest, we wicked down again, price action spent. So it'll be interesting to see, does this initial momentum sustain itself below 110 for another kind of further bat of weakness, or does the price action now continue pushing higher, trying to take out these near-term highs around 116, and then ultimately grinding higher to take out this upside wick into just shy of the $130 per barrel area. Okay, so we're keeping an eye on that as well. Again, as always, I have my tweet deck all synced up and ready to go, so I'm all the time getting the latest news and the fundamentals as well on my tweet deck as well. So I think that's fundamentally very, very important with the volatility that we're seeing at the moment. So other than that, guys, all eyes really on the markets this week, and just seeing how we progress through the early parts of what was a very, very strong and bullish week last week. Have a good week, everyone. Trade safe, and remember to use your risk management to the forefront of your strategies.